Good morning, trading world. It is May 6, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Normally, I usually give you some insights or news in regards to what possibly or the reasoning behind the move in the market. Yesterday, with everything building the way that it is, I kind of hit a eerily patch of deja vu. So instead of giving you reasoning behind the market move, I want to take you back to a kind of story or a missed opportunity. And for those of you that have been trading for a while, have you ever had a day that hunted you because you missed the perfect setup? There was a day sometime back after a Fed meeting where the market was heavily oversold going into an FOMC meeting. The market popped immediately after the announcement, hitting overbought on my 4-hour charts. The next day, internals gapped down as much as I'd ever seen, and right at the cash open, the market sold off without being fully correlated, and with VIX lagging behind, not really reacting on the sell-off. The correlation got deeper as the market played out later into the day, sending everything into an orderly, steep-sloped sell-off. That Friday, the market wanted to bounce and started to initially, but suddenly out of nowhere turned down and again went right to the edge of what was a very important support that seemed to be the edge of the earth, and went through briefly before bouncing. That Friday, internals were mended by the close, but unsure, I sat and watched thinking this was the perfect level to short hard. But unsure, I let it pass without putting on a position. That Monday, the S&P 500 opened gap down almost 100 points or so, and the Dow was down almost 800 points. I had missed the perfect setup, with the market crashing from oversold on the daily time frame. That Monday, the market shot up to another level that was so familiar to me, but with the force and craziness I had not seen. I was paralyzed with doubt and fear, again not taking a position. Over those 2 days, the market had to be halted 3 times from these crazy drops. This missed opportunity still haunts me. I thought this story is so fitting because I see a similar setup now. The main channel is 416 down to 398. And the minor channel is 414 down to 404. The market's expected move is 400, or the lower end of that expected move is around 400. Remember, if we get below 400, the professional money managers will have to dynamically hedge, meaning sell S&P futures to hedge portfolios, and this is where it will get wild. You'll see the bear volume spike before or as we break that 400 level. Below 400, the next level that may matter will be 380. Now, earlier in the week in the pre-market, I said that after May 5th, I could get a clearer picture of of the consolidation building. And what is coming into focus is a massive fake out, a very powerful alternate thesis. Remember, when a majority are on one side and we get the opposite reaction, it tends to be more explosive in nature. That explosive fake out can be evidenced on the daily chart. This is a daily chart, and on the MACD you can get a sense of this fake out. Now, I've been kind of preparing people, or if you've been listening to me, I've mentioned that crashes don't really happen from overbought areas. Crashes really happen from oversold areas when dip buyers give up and throw their hands up, and we finally fall through that lower level into oblivion. This seems so familiar. So this fake out, thinking that we're going to get the cross on the MACD, but what's really going to happen is that we're going to open up again to the downside on the daily MACD. So we're looking at a very powerful move coming here pretty soon. Give me a moment while I bring up the key levels of the day. All right, here we have the key levels of today. And when things get really crazy, you can kind of throw levels out the window because it will begin to slice through what you think are important levels like butter. Starting on the support side, we have jack support at this 409 to 408 area. Queen support we have at the 406 to 405 area. And then king support we have 404. I have the 397 area, but if we begin to break and dynamically hedge, probably the next level lower that's going to even remotely matter is going to be around the 380 to 377 area. On the resistance side, jack resistance at 413 to 414 area. Queen resistance, we have 415 to the 417 area. Then we have king resistance at the 418 to 423 area. And this can be popped as well to the top side today. It's possible to hit all the way back to 426. The main thesis for today is bullish, closing above the 413.81 with a projected high or target of about 414 to 423. The alternate thesis, which we need to pay or put a lot of emphasis on today, the alternate thesis is bearish, closing below the 413.81 with a projected low or target of around 405 to 397. I'm going to emphasize this again. Whenever a majority are lined up to one side, let's say bullish, and we get the opposite reaction, it tends to be more explosive in nature. So we could be setting up for a very explosive move today. Up until this point, we haven't seen real selling to the point where professionals have to dynamically hedge. Then redemptions and margin calls hit the tape. Up until this point, it's all been orderly, algorithmic flow. If things happen the way I suspect, we could feel as though we are having two different day structures all in one day. We could feel the power of a major downtrend day and then also feel a powerful trend up day. We have a jobs report today at 8:30, which could be the catalyst to kick off all the craziness. I usually do scenarios, but on a day like today, nothing can really prepare you for the madness or craziness that could possibly come. And it's almost even impossible to kind of diagram what could actually happen. But what I will give knowledge to, let me put the opening or the previous close up. All right. I put the blue line up. This represents the previous close. And for those of you that have been watching for a while, it holds a lot of significance because it differentiates. It plays a big role in differentiating the day type. When it comes to the expansive range day or range day and trend days and rounded reversal days. I will be paying close attention today if we don't break through the previous close. And actually, today, if things line up the way that I'm thinking, whether it breaks through or not doesn't even matter today. We could look and have an expansive range day and we close above this previous close, and we at some point reverse and turn around, and it could feel like the most powerful trend down day that you've ever felt. And then at some point we could turn around and it's going to feel like we're in this amazing trend up day. So it's going to be hard to know when this happens. You kind of have had to be positioned and okay with the risk, because trying to get into things today, the volatility is so crazy. It has options. A lot of you, like me, I like to trade 0-day options. They're going to be so bloated today that it's going to be hard to get a feel of getting in, and then it's going to move so crazy that it's going to be back and forth to a point so crazy that it's going to be hard to kind of profit from timing of getting in at the right point. So again, I usually do a scenario, but just the way the feel that I have for today, it's not worth doing the scenarios. Days like this, you're either prepared and you're okay with the risk that you have on, or you pretty much have to stand aside and watch. Nothing is 100% sure. It's just over time and that deja vu feeling, that perfect storm setting up that I felt a time or two before. It's all here for me again. But the main thing is that this is just the sign. This is just kind of like the opening play. This isn't that crazy day that actually happens. You'll get the feel of craziness today, but the real fireworks will probably happen Monday and Tuesday. And if you're fast enough and you get a chance and we get a bounce at some point today, that's going to be the perfect opportunity to kind of set up or reload your bearish positions for Monday and Tuesday. So, as always, more pertinent than ever to understand and know your risk. And like always, I hope this helps. I'm wishing you a positive trading day. Have a great one.